So I heard you say that 50% of them, you rent out your bedroom. It's got an ensuite, a washroom, so you have your very own washroom. But then there's many where you can have your own little apartment as well, whether it's a 2-bedroom, 3-bedroom. But everybody shares all the common areas, such as I've heard there's, in some there could be, restaurants, yoga studios, as you said, kind of like the WeWork areas, a swimming pool, all that kind of stuff. So I would think, D'Arcy, to be able to do that, you probably need a lot of space. Like something like that probably wouldn't work in Toronto, would it?
It's a little bit, yeah, it's a little bit trickier to do in certain markets. Like for instance, in our one of our Miami projects, we have 70,000 square feet of amenity space. And so that amenity space becomes the space where you're effectively not renting it, right? Where it's the gyms, it's the event space, it's the pool. And in a place like Toronto, you'd get heartburn thinking about having 70,000 square feet of amenity space, and the rents that you would need to charge to be able to make sense out of this model, it would be significantly higher than maybe we'd feel comfortable underwriting to. So I think it works better in certain markets, no question about it. But with similar characteristics to Toronto, really, where markets that are, for the most part, growing populations, but somewhat where the call it the millennials are somewhat priced out of ownership, where they want to live in core urban areas where there's a lot of opportunity, whether it's tech jobs or just jobs generally. You've got a great quality of life, including, restaurants, arts, and these types of things. But ownership can be prohibitively expensive. And so you create these society buildings to sort of create that pride of ownership, even though you're a renter, and you still have access to all the things that you need to access. And you actually have savings where, if you think about your internet costs, maybe your event costs, your gym and facility costs that you'd otherwise be spending to go to the nicest gym in town, now you have all of that in your building. So it wouldn't work quite the same in Toronto, or maybe it would look a little different in a different form, but that is not necessarily our focus market for what we're doing in the US. Our focus markets historically have been South Florida. We're really interested in the Sun Belt, which is, the south, really the southeast, all the way across to Arizona, including Texas and some other major markets where you have growing populations, you have, population migration. If you look at, a lot of the cities in Arizona, a lot of cities in Texas, some of the Carolinas, Nashville, Charleston, and particularly we've got a very deep interest in Denver, where we're going to be doing a Society Denver project, it looks like, next year. So, a lot of interesting trends to follow where people are moving to and from, and a lot of markets where this strategy, we believe, will work very well.